Good afternoon, everybody. Thank you so much for joining us. My name is Michael Del Castillo. I am the senior editor of blockchain and cryptocurrency over at Forbes, here with one of my oldest sources, going back almost 10 years, Muneeb Ali, the co-creator of the Stacks cryptocurrency and the CEO of Trust Machines. Muneeb, thank you so much for joining us.
It's great to be here.
We normally just talk business, sadly. Today, though, we're going to get a chance to go back in time a little bit. I want to get to know a little bit more about you as a person, and make sure that our audience has a little bit of an understanding about how you got to the unique place that you're at right now. So let's go back in time. And I want to get the two most fundamental questions. Where were you born? And tell me a little bit about mom and dad. What were they like?
Yeah, so I was born in Pakistan. And I come from an army family. My dad, he retired from the army. And he actually grew up in a village near Lahore. So imagine he grew up without electricity. He had to walk, like as a kid, God knows how many miles to go to school. And he was one of the few kids who was actually like trying to go to school back then. So he always has this card on me now. I can never complain about like anything in life, because nothing beats like growing up without electricity.
It's kind of true.
And so on, right? So no, I'm very, very grateful. So come from a pretty humble beginnings, and also like growing up in Pakistan, just to connect the dots a little bit. I think over there were two concepts that I think have stayed with me, and they're very relevant for the work I do. One is that there was always rapid inflation, and your local currency, the rupee, is always kind of like, devalue. So I'm used to my parents always like trying to keep money as gold or property, really. Like they would, like everyone is like dreaming about, hey.
When you say keep money as gold, what do you mean? Which money? And like we talk about literally under the mattress, like no security risks here.
Yeah. No, it's basically, I think there's a big tradition that even when, people are getting married, like gold is actually a big part of the wedding.
Okay.
So any of the sort of like, savings that people typically have, like especially women, they're in gold. And then property is a big thing, right? So when you're growing up, you're getting your job, like, you'll start having like social pressure to start saving up so that you can actually buy some small piece of land, because everybody sort of knows that if you keep your rupees as rupees, they're just devaluing all the time.
So for people that don't know, first of all, let's just define that real quick. So briefly, what is hyperinflation, and how is it, like what decisions were made and by whom that led to the rupee hyperinflating like that?
Yeah, so I think the way to think about this is like, like decades ago, there were some currencies like the US dollar that were actually backed by gold, right? So you're backed by at least some hard asset that is scarce. And at some point, I believe early 70s, like this, they were decoupled. So the gold backing of the US dollar was removed. Pakistani rupee is different. It was sort of like never like that. And now you're completely at the mercy or in the control of the governments, right? So whatever their fiscal policies are, if they decide to print more money, they print more money. And the analogy that I give people all the time is that imagine you have like $100 in the bank account, and the US government or any other government decides that they're going to take 10% of that directly out of your bank. I think there will be like protests on the streets if they did that. Inflation works exactly like that. But it's like you're slowly kind of like boiling the frog, right? You're not saying like one day we're going to come in and take 10 bucks out of your account, but over the year, we're just going to make your $100 worth $90.
So how old were you when you came to the United States? Do you have any sort of like visceral memories of actually dealing with that firsthand? Or is this more like family lore that's kind of been passed down from mom and dad?
I think like I came to the US for grad school. I was in my 20s, and so I'll pair the second thing that I noticed. Okay. So I was one of the first kids. I'm very grateful to my parents that they actually got me a computer at a very early age, and it was like a big deal, right? Like my mom had to like save up for God knows how long to be able to afford it. It was a really big deal, and so I remember money was always a little bit like tight growing up, and I remember that I couldn't ask them for an internet connection. I felt bad enough that they got me the computer that I couldn't be like, hey, like, I need this like dial-up modem, and then you have to pay for my internet connection. And just like in some of the school circles, people were sharing these hacked accounts. So effectively, it's someone else's login. And
so did your parents get you the computer for school?
No.
Okay.
It was something I wanted,
Okay.
they got it. They were. I was a very stubborn kid, and I wouldn't let go. And so I remember. So the way I came online, this is like 97. I remember even the first email is still in my inbox somewhere, and we would only use the internet at night, because the idea was that this is like somebody else's internet and they're sleeping. And I'm kind of like, only kind of like use it at night. And it was those dial-up modems. So if somebody else dials in on the same account, you will get disconnected. So you could tell if there's somebody else trying to use the same account. So I God bless those people, like whoever they were, whose accounts I used. I've always felt bad, like it felt like stealing a little bit, but it's still like, come on, I'm staying up all night. This is
You're being nice about it. You're being a considerate internet borrower.
Yes.
So you said you came to the States for school. Where did you study? What did you study? And at what point in that process did you first hear the magic word Bitcoin?
Okay, so I always loved computer networks, like programming from an early age. So I did my undergrad in Pakistan, and then I was always fascinated by computer networks and wanted to do research there. So I came to the US 2008, started my PhD at Princeton. And I was like, this is like a dream come true, right? Like it's people whose networking books I read as a kid, as an undergrad. And now I'm like walking across the hall with their name there, or sitting down for lunch with them. It was like a dream come true. And over there was a young professor, Arvind, who ended up being on my thesis committee later on. He was just starting off. This is, I believe, 2011.
Okay.
And he was the first person who held a seminar at Princeton studying the Bitcoin paper.
Well, Arvind
Narayan. He wrote a book on Bitcoin later on as well with Ed Felten. Ed Felten is the founder of Arbitrum.
And set the stage for us. Like, was it a lecture style address? Was it virtual? What was your reaction? At what point did you realize that this thing that you had just seen might in some way impact your future career?
Yeah. So it was there are these reading groups in the computer systems department. So they're always very small, like 5, 6, 7 grad students show up, and we basically collectively read a paper and then we discuss it. So I actually remember that's the first time I heard about it. I actually missed that seminar. There was something else going on. I actually couldn't go, and I still have the paper saved in a folder, and the name of the folder is To Read.
That's right? Awesome.
and it's the PDF, the Bitcoin PDF is there.
This is the Bitcoin white paper.
Bitcoin white
to
paper.
read.
So I missed that seminar, and imagine like how much I missed because then it was a gap of 2 years before I came back. So
fascinating.
2013 is when I was supposed to graduate. I had a thesis almost done on a different topic. And me and my co-founder, Ryan Shea, he was undergrad at Princeton, we basically decided that I'll take a leave from grad school and we'll try to basically hack on a startup idea. Like we didn't really know what we were going to build, but I knew enough that, I want to go and actually try and build something. And I think that's how our journey really started.
And so what you decided to build is interesting. Maybe it was a little bit ahead of its time. I think that people haven't started talking about what you guys were working on. This was back in 2014, right?
2013 we started, and we launched the first version in 2014.
So it's just kind of starting to come back in the last 2 or 3 years. But for those of our audience that doesn't know, what was the first thing that you guys set out to do? What technology did it leverage? And what was sort of the value proposition that you were hoping to bring?
Yes. So when we discovered Bitcoin, so this is summer of 2013. And we basically, both me and Ryan, it was like a rabbit hole for us, right? Like we just went deep. Couldn't stop playing around with it, thinking about it, talking about it. And interestingly, like for some reason we didn't think that we are actively like working in Bitcoin. Like we thought we are going to build a startup in some other area. And everybody around us, we were in a co-working space, thought that we are actually working on Bitcoin, because all we will talk about is like Bitcoin all the time, right? And at some point we were like, wait a minute, like we seem way more excited about this Bitcoin thing. Like, should we like actually try and build something here? And playing around with different ideas. And one thing that stood out, so I have a distributed systems background, like basically building large scale computer systems, data centers, and so on. And one of the first things that stood out is, hey, look, this netbook, it's great for this simple use case of like sending payments, but you could do like a lot of other things with it.
This network being the Bitcoin blockchain.
Back then it was just Bitcoin.
Yeah.
Right? Like there are these other small forks and small networks. They're much smaller. Nobody would take them very much seriously.
Yeah.
Bitcoin is kind of like the only thing. And that was an interesting thing. Ryan is like an ideas machine, right? Like that guy's is super smart. And he's like coming up with a bunch of different things that can be built on top. And then we are trying to basically, I think, narrow down on what's the fundamental protocol that can enhance Bitcoin so that almost like, you can build internet-like services on top. So it's like early architecture of, what people call like, decentralized internet, or even Ethereum, I think ended up executing on some of the similar ideas. And we were sort of like trying to do it on top of Bitcoin.
What was it called, and what was the main service that you guys were offering?
Yeah, so we started off with building a decentralized domain name system. So we called it BNS. And there's confusion around what the B stands for. And I always say, well, we always meant it to be Bitcoin, like, right? So BNS stands for Bitcoin Name System. Like, you've seen the people with .eth in their Twitter handles. So this thing predates the ENS, right? So there's some prehistory, but it was launched on Bitcoin in 2015. And there was a client application. It's a web app that we built called OneName. And that's the thing that was user-facing, and a lot of people used it, right? So it's, I think we got around maybe close to 100,000 users on it. And this was a completely unique application built on Bitcoin, because Bitcoin was meant to be payments and money, and this is a completely non-financial type application. To people, it felt like a about.me type of a page. It's a simple profile. You're getting your username. The username is registered using BNS, the Bitcoin name system on Bitcoin. And that was, and it's actually sending significant traffic to the Bitcoin network, to the point that, some of the core developers are yelling at us that we are having a hard time scaling, like just the
sounds very familiar to some stuff that's happening today, but we won't get to that quite yet. So is it an oversimplification to call it an identity layer on the Bitcoin blockchain?
No, you're
okay, cool.
You're
and
right
the thinking there was that Bitcoin as money plus one name as identity layer equals what? Like, what were you hoping people were going to do with that? And then what ended up being the obstacle that kind of like kept it from happening at that early age?
Yeah, I think decentralized applications, right? Almost like the biggest vision that we had, and there are some talks. I think there's a TEDx talk from 2016 that I had, and it was all about building a decentralized internet. It's like how the internet got centralized over time. There are a couple of companies like Google, Facebook, that own all of your user information. People don't have the freedom to basically just withdraw their profile or data from one provider and take it somewhere else. They're not in control of things, right? So that was it. And I do think that even the applications that we see today, like decentralized finance or NFTs and so on, they're sort of like a subset of that.
Yeah.
The grand vision still remains that there will be a lot of different types of decentralized applications.
So you've always sort of struck me as a guy that wanted to do more with his crypto than just buy low and sell high. I think that was one of the reasons why I was interested in your work in those early days. You ended up doing a couple different permutations and experimentations throughout the process of you eventually getting your PhD from Princeton. I don't want to spend too much time on all of those, but I do want to acknowledge that they exist, because I think it sort of shows a little bit of an evolution, not only of what you were thinking, but of what the technology was capable of, right? Your work kind of has felt like, over the years, a guy who was kind of bouncing back and forth between what he wanted to build and what the technology would let him do. And so 2017, you guys raised $50 million underneath the name Blockstack. 2019 raised another 23 million with some like an unusual fundraising, right? Like you were looking to be compliant with regulators, at least as I recall the second one specifically. Talk us through a little bit. So this was not on the Bitcoin blockchain, right? So
it is. Let me.
Okay, so let's go. Let's go. Let's go. So let's go back to 2017.
Yeah. Let me get into it. First, I'll just share a joke. I was talking to this friend, and he said, Muneeb, your biggest weakness is being too early to things.
Right? I like would agree with that.
You need to like you're ahead. You need to like pace yourself. Let the industry like catch up. And I've actually taken that input as well. And similarly, so imagine like BNS, we launched it 2 to 3 years before ENS started. Same with the
before the Ethereum naming
Ethereum naming system started, right? Same with this offering you're talking about. Like imagine the kind of pressure from regulators like today on the crypto industry, and we were in 2017, literally 5 years before, thinking about this exact same problem, that our industry at some point would come under a lot of pressure. So what is a way of actually doing a more regulated or compliant offering? So we'll talk about that a little bit. In terms of another thing which I do think we were very early on is L2s.
Yeah,
layers, Bitcoin layers, right? So our experience on Bitcoin, L1, the layer 1.
So Bitcoin, just for those that don't know, Bitcoin is considered a layer 1 blockchain.
Yeah.
L2 is services built on top of that. L0 is services that connect blockchains together.
Sure. Yeah. Right. So I think of this as like another definition would be L1s are sovereign blockchains. So they can live independently. So Bitcoin is a sovereign blockchain. Ethereum is a sovereign blockchain. And L2s are sort of like dependent on the underlying L1, and they're sort of like built on top. And then there are several like technical definitions as well. What's a true L2 versus what, without getting into the details. I think our experience in 2015, 2016 on Bitcoin made it like crystal clear that not just for Bitcoin, for any other like chains out there, they're only going to scale in L2s.
Yeah.
Right. And that was the start of the Stacks project. So we raised capital.
And by scale, we're talking about increasing transaction volumes, the speed that it closes.
Yeah, it's basically transaction volumes. Either you want to make it faster, or you want to get more users, you want to get more transactions, or you want to build different types of functionality, right? The two different types of reasons, but both of them require these L2s, additional layers on top of the L1. And I think that's where, if you look at almost like 5 years later, there were a lot of attempts to even scale Ethereum L1. And most of the kind of like, even in the Ethereum community, the consensus now seems to be that everything's going to happen on L2s.
Yeah.
Right. Like, because there are limitations on L1. And we sort of like made that call when we started the Stacks project in 2017, and similar times when Lightning started on Bitcoin. And speaking of calls, another call that we made back then was that the type of programming languages are going to end up being extremely, extremely important, because people have never kept money on computer programs before, right? So it's a very fundamentally different thing. Like,
absolutely.
Computer programs were never, these languages that we are using, they were never designed to actually keep hundreds of millions or billions of dollars on them, right? So I think this is a thing that hasn't played out yet, but I'm seeing early signs that the world is heading towards this. So we spent a bunch of time doing R&D on what's called a decidable programming language. Mm-hmm. So it's a bunch of computer scientists from Princeton, my colleagues, plus MIT and stuff. And the difference is that the programming language used on Ethereum today, Solidity, it's Turing complete, meaning you can program anything you want. But it's also very hard to reason about those programs. So what is this program really going to do? Like the way to think about this is that the potential attack surface is much bigger, and developers can hurt themselves unintentionally.
Okay.
Right. But if you make the programming language a little bit more stricter, we call it decidable, where you can pretty much program whatever you want, it's a little bit more precise. But then you can analyze all the different execution paths that the program can take. So without even running it, right? So you don't want to actually run it. It's like, imagine the kind of languages that are used to control airplanes. You don't want to be in a position where there's an error in mid-flight and your passenger plane is actually like in danger, right? Like these smart contracts that keep like hundreds of millions of dollars are sort of like that.
So you just mentioned the word smart contract, which is good because I want to talk about, so you had to make some decisions about the language with which you were writing this stuff that, quite frankly, I will never understand, and I think a lot of our audience won't. But the reason why you had to make those decisions, I think we can wrap our heads around. So very briefly, what is Stacks?
So Stacks is a Bitcoin layer. I think most people would think of that as a L2.
Mm-hmm.
So I'm not getting into the technical definitions. Like if you get very technically precise, people like classify L2s in different ways. But I think most people are going to think of it as a Bitcoin L2 built on top of Bitcoin. What it does is that Bitcoin doesn't have smart contracts, right? Bitcoin is very simple. It is just made for payments. It has this very simple, durable protocol that, only ever going to be 21 million Bitcoin, but you can't do much with it on the L1 chain.
Yeah.
Compare that to Ethereum. Ethereum is much more complex, but people can program it. People can build, people might have used OpenSea, the decentralized exchange. They might have used like NFTs. All those programs are built by developers directly on Ethereum.
And to be clear, so Ethereum came out a couple of years after Bitcoin,
yes,
with the smart contract functionality crucially in the layer 1 layer. So out of the can, so to speak, Ethereum developers were writing these more sophisticated smart contracts that let them build decentralized applications at the layer 1 level, which was nice because the technology was already there. Some people considered it a little more elegant. Bitcoin didn't have that smart contract functionality. Why not just rewrite Bitcoin so that it has that smart contract functionality? It's open source, right? Couldn't we change it?
Yeah. So I think one of the strengths of Bitcoin is that it's very hard to change it.
Yeah.
Right? So that's one argument which I completely believe in, that Bitcoin is durable and safe and less risky and all of those things because you can't change it and because they're very, very careful. The culture in Bitcoin is that any small change is actually, the bar is very, very high before you make it. Making drastic changes is sort of like not even on the table.
Yeah.
But here's a second interesting argument. If it was even possible to do it, I would argue that you shouldn't do it at the L1, right? So that's the concept of, this was part of my thesis as well, which I finished in 2017, that if you look at the internet or any other sort of like computer systems that have stood the test of time, they usually are very, very simple at the base system, right? So the internet at the base level does very simple things like just send data from here to there, right? And then people build more complicated things on top. And I think these types of protocols, they tend to actually work better. So I would argue that even if Bitcoin was open to these changes, it's actually a more elegant design to leave Bitcoin very, very simple and then build these additional layers of functionality on top of Bitcoin.
We're using the term decentralized application to talk about what people are using your smart contract language to create. Why not just have a centralized application? What's the benefit to either the company or the users to moving these processes to more decentralized models?
I think we can just take the example of the recent failures in the crypto industry. Right?
Uh-huh.
So if you look at FTX, what was happening?
Cryptocurrency exchange exploded.
Yes.
Took down a lot of other exchanges with it.
Yes. So I think over there, it's a centralized company. People are depositing their funds, and they're sort of like trusting that the company is going to do the right thing. And the company was actually taking user deposits and gambling with it, right? If you replace FTX with a decentralized exchange, there's no company in the middle that can actually take your funds and go gamble with it, right? So your risk actually goes down a lot. There's other types of risk because now you're trusting like this smart contract, but they are manageable. Like you can audit them. These are open source things. You can actually, and they harden over time as well. So in terms of, I think this is the fundamental difference is about trust. The current kind of like both financial system and Silicon Valley is mostly built around trusting these institutions. And I think the next wave of technology is basically saying that's not needed. And we can actually build more transparent, more open systems that are actually more durable because you're removing these points of failure from the equation. And I think
so. I think it's fair to say that with Ethereum's smart contract functionality at the layer 1 level, right out of the gate, and all the enthusiasm that came with those first couple years, that they got a big head start on Bitcoin smart contract functionality. And there's actually been not only your work, but some other people's works. I'll mention RSK just as one example of people that are doing similar stuff, though not exactly the same. And like they seemed like very good ideas. They seemed like very promising. There was a lot of passion in the Bitcoin community, a lot of money in the Bitcoin community. It just made sense that why not have a smart contract layer on top of it? But really, like, I mean, if you look at, you know, usage of Bitcoin smart contracts compared to usage of Ethereum smart contracts and all of the so-called Ethereum killers, like it's not even comparable. Like Ethereum and the Ethereum killers have just like really, when people think of smart contracts, that's what they think of. I feel like maybe, and again, to your point about maybe being a little too early to things, like maybe we're starting to see the beginnings of some changes in that narrative. And I'm going to put it back to the creation of Bitcoin NFTs as one of the big moments in that. But if I'm wrong, please do correct me. Let's go back to like maybe roughly that time, maybe a little more before, a little after, and talk about when that dialogue started to change, when you started to see some traction go up on the adoption of your technology, and we can get to a little bit of price talk about the Stacks cryptocurrency as we get into that.
Sure. So I think so Stacks, the Bitcoin layer, it launched in early 2021 after a bunch of R&D with Clarity, this new programming language, and the new consensus mechanism. And I think I would say it got decent traction, obviously compared to Ethereum, relatively small. I think it went to like $3 billion in market cap, over $1 billion got locked up in these smart contracts and so on, which is, I would say, like a decent start. And
by most metrics, it would be considered very successful, right?
Yes. But I do think that there are some fundamental limitations right now, even with the layer. Behind the scenes, I do think that one thing that, again, being early to stuff, the early team members were extremely careful about decentralization, right? So imagine that the early company that was doing the R&D, it was sort of like dismantled. It still exists. The cap table exists in some other form, but it was the team members just went off and did independent things in the ecosystem. So it's like, I would say, one of the most decentralized projects out there, where there are independent, almost close to 30 entities. And it's actually a lot of overhead when these people try to now all contribute to the open source project. But I think it's good for the long-term health of the project. And secondly, I think one of the biggest unlocks that's actually coming probably later this year is the ability to move your BTC capital from the L1 into the layer and then back in a decentralized way, right? So you haven't really truly unlocked the $500 billion of Bitcoin that's just sitting there passively. And I think, so we haven't seen like a true Bitcoin L2 do its thing.
Yeah.
Right? Because like what's the first thing you want to do? You want to actually deploy your BTC capital, right? And put it to use. So I don't think that system is even live yet. Like that's happening later this year. And to your point about what are the challenges in Bitcoin? I actually think a lot of the challenges are actually cultural. And lack of like developer tooling and infrastructure.
Cultural challenges, including people that don't want Bitcoin to do some of the stuff that you want it to do, right? Why not? Like, isn't all progress supposed to be good progress? What's the thinking behind these skeptics that think that Bitcoin shouldn't have this functionality? And what are we starting to see that might be changing, or is it indoctrinated and not changing anything?
Yeah, I would say that I've been in Bitcoin for like 10 years now, right? So I would say there was a sort of like a different culture between 2013 and 2016, 2017. 2017 is actually a pretty formative year for Bitcoin because a couple of things happened. There was a big like civil war internally in Bitcoin, the block size wars, where there was one community that was sort of like saying, don't increase the block size. I was actually supportive of that. Like, I do think Bitcoin should remain simple, not try to do too many things at the L1 level. But that community sort of like started making arguments that all of these other use cases are useless. We don't need them. We only need the money use case, right? My argument was keep the L1 simple, build the use cases as experiments on top as multiple layers and let the experimentation happen. I think when the internal civil war ended with the small blockers winning it, and they were very kind of like excited about it. And then the Ethereum really started taking off in 2017 as well.
Yeah.
So a lot of the people who were more kind of like intellectually curious with playing around with things, building stuff, started going to Ethereum and then other chains. And the developer culture was also very different, right? Ethereum, you can make fun of certain things, all of that, but they're very welcoming. And it's actually a healthy dev ecosystem where it's a little bit like Silicon Valley, right? Experimentation is encouraged. Go out, fail, build your ridiculous thing, because the long tail of things is not going to work. It's only going to be a handful of ideas that actually really take off. For Ethereum, they've been like stable coins, DEXs or NFTs and so on, and they've really taken off with significant user traction.
I remember, I think my favorite anecdote to sort of like demonstrate the clear dividing lines between these two communities is when Lightning Labs released an upgrade that let NFT functionality activate. I got angry emails from people that was happening, and I hadn't done anything. All we had done is sent a tweet out and maybe done a little article about it, and like we got attacked because somebody had come up with a way to do NFTs on Bitcoin. Now, just a couple of months later, maybe a year later, we saw Bitcoin NFTs pick up in a serious way. I do think we have to take the opportunity to clarify something here, because there's a big confusion out there. Is Stacks behind ordinals?
Yeah, so I think I've been, some people actually message me and they're like, "Are you the founder of ordinals?" I'm like, "I'm not." Like, it's an open source project that we discovered, and I support it because let's give a little bit of a back.
Yeah, let's go back. So what is ordinals, and how has that sort of like jump started interest in this whole using Bitcoin for other stuff?
Yeah, usually I would give first the technical description. I'm not going to do it here. Just think of that as ordinals enables NFTs directly on Bitcoin L1.
Yeah.
Right. And the key difference is that you can put the image directly on the Bitcoin chain,
as opposed to
just a pointer to some data that is outside some.
As other blockchains,
as Ethereum does.
Yeah.
Most of Ethereum NFTs are not like, the image is not on the Ethereum chain.
Yeah.
So the interesting thing was that this Bitcoin culture over the last 3-4 years has basically been very little developers. I won't say no developers. There are some developers that are still around. Mostly non-technical people who have the same talking points, and they go on each other's podcasts and basically repeat those talking points.
Yeah.
Right. Because nothing new is happening. Like literally nothing is happening. And a bunch of technical people, like actual computer scientists and developers who are building new stuff, they're basically being shut out. Right. So you would have noticed I haven't been on any Bitcoin podcast, right? Like, not welcome, right? So
because you're the
I'm
smart contract guy.
Because I'm building stuff. There might be tokens involved, and these people are. So it's sort of like a religious cult.
Yeah,
right?
yeah.
And they are, and the more time is passing, it's almost like the evolution of any kind of like religious cult. They have to become more and more extreme. Right, so they keep kicking out people from their circles. They keep picking like on random, like if in another ecosystem people are actually building stuff and having discussions about it. Over here, the discussions are random, right? Like it's about something someone said that was like out of party lines, and that's all it's about. And I think over time, this community actually started like just attacking itself, really, right? And a lot of people. Kind of like start disassociating with them, and I think the moment was right for the launch of ordinals, because there were enough people who were completely sick and tired of like the religious cult, and really hungry for new use cases on Bitcoin, right? So when people started putting these JPEGs like directly on Bitcoin L1, a lot of the reaction from people was, wow, I haven't had this much fun with Bitcoin in like 5 years.
Yeah.
Right? Bitcoin is interesting again.
Yeah.
Developers started taking notice, right? So this is where Stacks confusion with ordinals comes.
Yeah.
That what happened was the Stacks ecosystem is one of the few pockets of active devs in the Bitcoin broader ecosystem, right? They have capital, they're sophisticated, they're actually building stuff, and they know how to quickly come in and execute in a professional manner. And there are many companies like that, right? So a bunch of these wallet companies, they came in and they started basically building the best wallets for ordinals. And interestingly, there were some other wallets, I won't name them. And so imagine there are new users coming in that are coming for these new use case NFTs. They will go for support to these wallets and get yelled at in the Discord channels, right? So on one hand, there are these, the religious cult that is sort of like saying, we don't want this use case, but the use case is already live on Bitcoin.
Yeah.
You can't stop it, right? Like it's already compatible with Bitcoin's consensus rules. It's happening. So many new users are coming in, and we're seeing the benefits of that, right? So that's where I think a lot of NFT trading markets, because on the L2 there are NFTs and people trade them already. It's a smaller market, but it's there. So those trading markets like Gamma, they went in, they started supporting the L1 NFTs, which sort of like was like a logical choice. And I think that's where a lot of people also sort of discovered the Stacks layer. That, oh wow, there's a Bitcoin layer already that has like a bunch of activity in the devs, and I think the projects basically started getting more attention.
So to be clear, they are separate programs. You can do NFTs on Stacks though.
Yes,
and you are seeing volume there. I want to talk about the impact that that and maybe other stuff is having on the Stacks price. I looked just before our talk today. It's gone up something like 40% just in the last day, which kind of blew my mind. And it's gone up even more over the last month or so. Now, that is notably quite a bit lower than the all-time high, which was about a year ago. So there was a big downturn. And then sometime late last year, early this year, the price started to explode. What do you see as the next steps for the Stacks infrastructure? And maybe we can talk a little bit about how Trust Machines, your latest project, fits into that.
Yeah, so I think this is an interesting thing that our industry is meant to have all these decentralized projects, but people aren't used to seeing a real decentralized project. I think Bitcoin is a real decentralized project. Like there's no company behind it. There's so many independent actors. And Stacks, because of that Bitcoin ethos, has been very, very careful about decentralization, right? So again, there is no Stacks entity. It's an open source project. I raised capital into a completely new entity called Trust Machines. Just last year, we raised a $150 million round, and we use Stacks. We also use Lightning. We also use DLCs. But Stacks is sort of like the best programming layer available. So obviously, we end up using it. And in terms of kind of like price action, I'm not a trader. I'm an engineer.
So you're not trying to capitalize on that price movement. You're focused more on the building side.
More on the building side, but I can point people to there are public thesis written by folks. Like there's one I read by this guy Hall Press from North Rock, and he has a thesis that these Bitcoin layers are going to be a lot more valuable in the future, because if you look at Ethereum, again, this is public information. People can just go and read the thesis. If you look at Ethereum is around $200 or $250 billion of capital, and something like $50 billion of L2s. Right? 25 billion are already public. And rest are private, like they've gotten their fundings, they haven't launched yet, and so on. So $50 billion market betting on like L2s on Ethereum are going to be huge. Bitcoin is $500 billion of capital, mostly passive, right? You can't even do much with Bitcoin on L1s. And the total kind of like L2 market would be like 1.5 billion, of which Stacks is like probably 1.3 billion.
So
right.
Give me one or two examples of something that you'd like to see come out of Trust Machines in the next year or two.
So with Trust Machines, one of the areas, so it's funny, like, you made that very valid comment about why haven't we seen more development around Bitcoin? other than the culture part, which we discussed briefly, I think now it's easier to ignore that crowd because there are enough builders coming in, and there's enough,
including some Bitcoin maxis that are getting into it.
Yeah, exactly. So it softens, it just softens the thing, right? And it becomes more acceptable to build on Bitcoin. So I think that was a really good thing. So the culture is getting better. What's the hurdle after the culture? I think the infrastructure and dev tooling just requires so much more work. Like Trust Machine, we had really, good ideas about what type of Bitcoin applications we want to build. And we will soon discover anything that we look at, even Stacks itself, or Lightning or DLCs, that to really use these technologies, there's a lot more work that needs to be done, right? So for Stacks, I'll give you the example that this decentralized way of moving BTC capital from L1 into Stacks and back.
That's Bitcoin capital.
That's Bitcoin capital. Yeah. So there's this asset called SBDC. It's like a decentralized Bitcoin-backed asset. So your Bitcoin, SBDC is always one-to-one backed by BTC on L1, right? And you can use it in a more programmable way. And then when you're done, you can bring it back to the Bitcoin L1. That work is in our business interest. But it wasn't moving at the speed we would have liked it to move. So we are putting a bunch of our engineers to try and push it forward. We are contributing to it. So, why we are doing that? Because that thing is absolutely required for our applications. Like imagine if we want to build a lending application where people can go from BTC to a stable coin very, very easily. Like,
is it fair to say that right now Stacks and Bitcoin are fundamentally two different blockchains, and this kind of work would integrate them a little bit more deeply? Is that?
I think you're in the right direction. So the Stacks project has this big upgrade coming later this year. That's the plan. And one thing that it does is Stacks would start benefiting directly from Bitcoin security. Right.
Okay.
So to reverse a transaction on Stacks, you would have to go and attack Bitcoin or reverse stuff on Bitcoin, which is really good for security. And the second thing is this movement of capital, right? So I think you're sort of like right. The next version of Stacks is a more true Bitcoin layer than the current version of Stacks.
I see.
And, yeah, go ahead.
Well, I do want to wrap things up here. You mentioned, interestingly, sort of the role that the collapse of FTX played in kind of changing some of the narrative around the industry and around finance, generally speaking. I think we would be remiss if we didn't talk about some other centralized collapses of late, in the form of even more reliable and depending on your perspective, well thought of institutions, a couple banks that have recently gone under. Silvergate's gone down. Signature was kind of taken over before it went down. And Silicon Valley Bank kind of just disappeared almost overnight. As a decentralized systems guy who's been in the space professionally for almost 10 years, is now advocating and pushing for the heretical idea of Bitcoin DeFi, decentralized finance on the Bitcoin blockchain. Any lessons learned, any takeaways, any thoughts on what the collapse of these three banks and other institutions has to teach us from a building perspective, from a security perspective, or maybe even from a technology perspective?
Yeah, so I think you're talking to the person who poured his life savings into Bitcoin in 2013, and people would rightly so call me crazy, right? Like there are some recordings of me giving talks, and people are laughing when I tell them that I did that, and even my wife didn't know until I've already done it, right? So at that time, it was like a crazy idea. I think now having at least like no exposure to Bitcoin would be, I think, a risky thing to do, right?
Yeah.
Like in the sense that on one end of the spectrum is you should have like complete trust in the US government and buy treasury bills, right? That's one end of the spectrum. The other end of the spectrum is something that is fully decentralized, and which is Bitcoin under your self-custody.
Yeah.
Right. And then everything else is in the middle, right? The banks are sort of like representing the legacy system. The other chains are sort of like in the decentralized space. And I think like even a couple of years earlier, I would get this question that how do you think Bitcoin goes mainstream? And my answer is always that it is a very hard thing for me, because even though I'm betting on Bitcoin, I think the path there is actually going to be very painful,
Yeah.
Like it's going to be failures of the legacy institutions because of everything that's been going on. Even if you look at the banks, because of the interest, the problem is actually the interest rate hike that is making these debt securities worth less, and banks have a lot of paper losses right now that become real if people start withdrawing their money. And I think they're trying to build a narrative that this is because of crypto. Like, what are you talking about?
Yeah.
Crypto is a very small part of the portfolio of any of these banks. And I think there are cracks in the banking system. And I think people are slowly realizing that Bitcoin is the exit, right? If you want to escape all of that, Bitcoin is the exit. And I think we might just see this play out.
Last, just a follow-up here. I think it's interesting the way that you put that people are trying to blame Bitcoin for these collapses. It's not a coincidence, perhaps, that they did all in varying degrees have some sort of exposure to crypto, whether or not it was directly through the assets and hopefully small percentages, or through investing in crypto companies or fintech companies, generally speaking. Once and for all, like based on what you're seeing out there, did Bitcoin cause the collapse of these institutions, or is there collapse evidence for the reason why Bitcoin needs to exist?
No, I would say not at all, right? Like basically the type of relationships that I'm aware of that these companies had with these banks, they were actually keeping cash there. That's it, right? Or they were using them for banking. Like if Coinbase is sending a bunch of transactions, Coinbase is a public company, fully regulated. It's not that I don't think these banks were actually betting on any of these assets. Like, I don't think their exposure to crypto was that way, but I think it's painted that way because crypto is the word. They're trying to make the word dirty, right? Like any association with this industry is somehow problematic. Whereas people, the free markets are independently realizing that is actually the thing that might save us, right? That is, it's the response to the centralized actors that where you're bringing the decentralized technology that are just more transparent. Like it's not like decentralized technologies are better. They're just more transparent. Anyone can audit it. Anyone can be in control of like what's going on. And that's just a fundamental shift.
Strong words. Thank you so much, Muneeb, for taking the time to chat. It was a pleasure to get to see you. Hopefully we'll talk again soon.
Thanks for having me.
Thank you.